back to Understanding Crypto. My name is Herve, and on this channel is where we cover things like predictive analysis, research, and tutorials to help guide you through this vast world of coins and tokens. If that's the type of content you find interesting, be sure to like this video and subscribe to the channel with your notifications on so that you don't get to miss any other value-packed video like this one. Today we are going to have a very interesting show because I will be a complete bull. This video is going to be long, so I will leave timestamps below. You may skip to the part of the video that interests you the most. But I do suggest that you watch the video all the way through because we are going to be mentioning some numbers and you will need the data mentioned in the video to understand why and how we arrived at those numbers. Now, if you go through social media, you will see charts that look like this. Everyone thinks that Bitcoin will go to $100,000 and beyond. Personally, I think Bitcoin will one day be worth more than $1 million as it becomes the world's reserve currency. However, when I look at its price, it shows me that there is a chance it goes below $10,000. More specifically, $3,000. Of course, no one likes to hear about this. Some say it sounds crazy. Others say, well, it's not only crazy, but it's totally impossible. The thing with every investment or trading strategy out there is that there is always a chance that it doesn't work. There is no perfect strategy. So to mitigate the risks of failure, traders use stop losses. In the aspect of investing, rather than sitting and waiting for a particular price, investors that invest solely off of data invest slowly while keeping enough fiat in the event where their forecasted price actually happens. That way, they can buy a lot at a given price range rather than just dollar cost averaging their way down from the all-time high. In this video, we will look into Bitcoin, but this time around, we will be more focused on the idea of it going up instead. So basically, we will be looking at Bitcoin as though the idea of $10,000 was out of place. Now, the way we will go about this is we are going to look at some key data points so that we have realistic price targets. The first data point will be Xgains from Bitcoin bottoms to tops. So from every bear market bottom to bull market top. So this is the Bitcoin dollar pair on the weekly chart. And as we can see from here, these are the percentage increases from each bear market bottom to bull market top. So from bottom to top. We are looking at this so that we can have a realistic price target as to where Bitcoin could be going up next. Now, for the sake of simplicity, we are going to be talking in terms of Xgains, not percentage gains. So from the beginning right here in 2011, Bitcoin was like $2. If you invested here and rode the wave to the all-time high right here, you would have made 520x returns on your investment. If you invested right here at the bottom in 2015 and rode the wave up to 2017 bull market top, you would have made 129x gains in returns. So that's 128.99. So we sum it up to 129x returns on your investment. And from this bottom right here in 2018, if you invested and held it all the way through to the 2021 bull market top, you would have made 21x returns on investment. Now, we can notice diminishing returns on this chart. It is not going up as much as it used to. So if you do the math, you will see an average reduction in Xgain increase of about 5.06x. Approximately 5x, which means saying that BTC will go to $150,000 will be out of structure because that would be a 10x increase from the current 15K bottom right here. However, according to the data which we have seen right here, now again we are just looking at data. I'm not saying that it will for sure be like so. We are looking at past data. If we go back to the data right here, we will see that BTC ideally should only go up by approximately 4.17x, which will put BTC at about $64,700. We are using approximate values based on data. This is not my opinion. This is not what I like. I wish it goes to 1 million, but based on this data, we are looking at a top at about $64,000, about $64,700. Now, the second category of data point we will be looking at will be the Xgains post-halving data. So we are looking at how much BTC went up after its halving. As we can see from here, if you invested on the day of the halving in November of 2012, this halving right here, you would have made about 94 times your money if you held BTC to the top right here. So it would have taken you a year to make 94 times your money. If you invested on the day of the halving in July of 2016 and held your investment up to the all-time high right here, you would have made a 29x return on your investment in December the next year. We can begin to see that, okay, this thing means investing on the day of the halving and holding for approximately 1 year. That's 2 data points. We need a third one. If you invested on the day of the halving in May of 2020 and held your investments to the all-time high right here in November of 2021, you would have made a 7x return on your investment. This would have actually been very good for somebody who is of the rinse and repeat type of strategy. You invest here on the day of the halving and cash out a year later. Invest here on the day of the halving and cash out a year later, and do the exact same thing here. You would have made $1 million if you were doing this only with $1,000 from here. We can notice another reduction in Xgains from this second category of our data point. We see that from each halving cycle to the other, we are actually losing in Xgains. And if you do the math by taking the average Xgains reduced per halving to all-time high, we will come to an average Xgain decrease of about 3.692 Xgains. So that's like the average reduction in Xgain per halving. Again, just data, not my opinion, just data. It will show us what to expect next. To get the approximate Xgain increase, we will divide 7, which is this one right here. That's the 7x we got from here. We will divide 7 by the 3.692, which will give us 1.89x for the next approximate Xgain of the sequence, of this sequence. This 1.89x in percentage terms will be an 81.1% increase in BTC price post this halving. So if we go into this halving, BTC should ideally, relative to the past data that we've seen, increase by about 81.1%. It may not be exact, but that's what we should expect post this halving given the previous halvings data. So on the day of the halving, go to your chart and measure up 81% increase. That should give you an idea what BTC's all-time high could potentially be. Again, we're just using approximate values here based off of data. Real data giving us what the approximate all-time high could be. So let's look at the Fibonacci projections here for the next all-time high. First of all, I want to quickly give you some levels here which you can keep for your own due diligence. But there are good zones to DCA in if you are of the idea that Bitcoin will not go to $10,000. So $23,000 is a good buy zone. The next buy zone will be $21,000. The third buy zone, which is where you will want to go all in the idea that Bitcoin does not go to $10,000. Because my idea is if Bitcoin goes to $10,000, it's going to crash badly. Everybody will be going long. Everybody, including you and maybe me. But that's where institutions will take that thing down and take your stop losses out. I don't believe there is a universe where Bitcoin just goes to 10,000 and continues up, because that's what everybody expects. In my opinion, I don't want to look on the bearish side in this video, but in my opinion, there is no way this thing goes to 10,000 just to please everybody and come back up. I think it will go a very long way to stress the biggest bulls out there, including Michael Saylor. Anyway, I don't want to be talking about extreme downside targets here. I'm just giving you the target. So we have 23.3, 21.1, and 14.7. Anywhere in between is great, but those are the levels where you want to concentrate capital if you think this thing is not going to go to 10K. Personally, if we just start crashing from here, I will also be a buyer at these levels. If we just start crashing from here, I will not be so into the idea that we're going below 10,000. I will want to concentrate capital at these levels. It could go to 12K. Ideally, it shouldn't, but it could, according to Fibonacci anyway. So that's for the downsides. If you are of the idea that it's not going to go to 10K, you want to dollar cost average at these levels. I'm not saying you should. I'm not your financial advisor, but those are the levels you should consider dollar cost averaging into. Just consider. I'm not saying you should. Just consider. Okay, now that we got that out of the way, let's keep looking up. By the way, if you're liking this video, please leave a like, and if you're not subscribed already, do subscribe. It goes a long way to motivate me, to make more videos, and it will help push this channel further. So please leave me a like, and perhaps comment what you are enjoying so far, or if you have a question, just let me know. I may include in my next predictive analysis video. Now let's look up. Assuming that you have watched our predictive analysis videos here, with the video on Bitcoin price history, you will know that this 15K bounce right here occurred at the 0.786 Fibonacci level. And the zone where price could be headed after this level will be the 0.236 Fibonacci level right here, before an overall correction. This 0.236 keeps us somewhere around $51,000. So that's a pointer to the upside. This is telling us that this thing could potentially go to $51,000, perhaps slightly up and crash. When you buy at the 0.786 Fibonacci level, you want to take profits or secure your trade at the 0.236 level. And usually the bottoms are not the 0.786 Fibonacci level. They are not also the 0.618. Mostly the bottoms are at the 1.618 or just the 1 fib. But the 0.786, the 0.236, the 0.382, these are not bottom levels. These are DCA levels for another push up before the bottom, just so that you know. So this thing could be potentially telling us, according to Fibonacci anyway, that this thing could go and do something like so. As we continue, you will slowly make up your mind as to where that top could potentially be. We will see the more extreme levels in a minute. The conservative bull market targets will be the 2.618 right here at $54,000 and the 3 fib at the $59,000 level. That's the 3 fib. This is the 2.618, and these are the conservative bull market Fibonacci targets. Now it's interesting to see that the 2.618 is somewhat very close to the 0.236, and the highest conservative target, which honestly are the bull market targets, because in the bull market we target the 4 fib will be somewhere around the 4.272, which marked the top of the total crypto market cap in the last bull market, somewhere around $78,000. Now, this is the conservative bull market target. The highest of that conservative target is $83,000, so somewhere around here. For the super bullish targets, which are those that would make the headlines, you would want to be looking at the 1.618 right here, which will put us somewhere around $96,000, and you could also be looking at the 2.618 at about $140,000, or you could even go as high as the 4 fib right here, which is north of $200,000. But honestly, looking at the past data right here, it will be ridiculous to assume that BTC is just going to go up here to these levels right here. You could base your expectations on BTC going on them, and it could be accurate. There is no way to know for sure if these levels will actually come into fruition, if BTC is going to go up here. But it will be crazy, so to speak, that you expect BTC to go up there, even though we have concrete data from these past events right here showing us that this thing is not going up as much as it used to. We have a 94x increase right here post halving to all-time high, a 29x increase right here post halving to all-time high, a 7x increase right here post halving to all-time high, a 520x right here from bottom to top, 129x gains right here from bottom to top, 21x gains right here from bottom to top. It will absolutely be ridiculous that you just believe for, I don't know, like just believing that it will then go up by say 13x, even though you see this reduction in Xgains over the past years. So that's why I will be sticking to the conservative targets rather than just assuming that it will go to 100k, 140k, or north of 200k. So these very, very bullish targets right here, you could consider that it goes there. That will be your own opinion, and you're entitled to your own opinion. But I would say that it will be completely crazy to assume that it goes up there, despite the data we have seen from this chart. It is showing us a reduction in percentage increase every other cycle. So I can't just assume that it goes up this time. I know some people will be like, well, BlackRock is coming. They will maybe have the spot Bitcoin ETF, and that's why we are going to go up. And perhaps you're right. Perhaps the world actually adopts Bitcoin and it just suddenly becomes the world's reserve currency. But we cannot argue with the data. Yeah, we had the world's richest guy, Elon Musk, come into BTC. That was a narrative then. And I honestly, I'm just going to say this. Crypto is full of narratives. I bet you that the day the spot Bitcoin ETF is approved, Bitcoin will go up, maybe by 10%, maybe by 15%. And after 2 days, nothing will happen. It will most likely just come back down, and people will start looking for the next narrative to be talking about. How about you leave all of that and focus only on the data, what we see right here? This is what we can't argue with. Anyway, I just focus on the data, and I urge people to do the same. This Bitcoin conservative bull case scenario could actually tie with the Benner cycle. So we have the years right here, which Samuel Benner forecasted the times that markets will have crazy crashes and crazy price increases. Yeah, like basically bull and bear markets. And his forecasts have been crazily accurate, actually. Well, sometimes he lost with his predictions, but some of them are just crazily accurate, like the pandemic drop in 2020 and the dot-com bubble crash all of that, the 1929 financial market collapse, he forecasted all of that. Now, he is saying that the markets are going to top in 2026. So he's basically saying that this big crash may come in 2026. Not 2023, not 2024, not 2025, but 2026. According to him, the bottom of that plummet may only be in 2032. So he is basically saying that the markets are going to be knocked out, and the only time when we will come back to life will be in 2032. So according to this chart, we should be selling by 2026 and only buy back into the markets by 2032. Now, according to the same chart, he is saying that we should be buying in 2023, which is this part right here. So these years down here are hard times, low prices, and a good time to buy. The years up here, which includes 2016, he was wrong in 2016, by the way, 2007, which he was right in, 1999, which again he was right, are the years that you should be selling and only buy in these years right here. With the years up here, he says that these are years in which panics have occurred and will occur again. So great plummets or great price increases may come in these years right here. So to sum it all up, he's saying that buy in 2023, sell by 2026, and only buy again by 2032. When you buy in 2032, sell in 2034. Now that may be the case with this type of conservative scenario that we see on BTC right here. I'm just trying to relate his idea to what we see on the charts. It's not certain, it's just what I am trying to make sense of. Now, nobody knows the future, people.
Nobody. I don't care if you're Warren Buffett or if you're Jimmy Buffett. Nobody knows if the stock is going to go up, down, sideways, or in fucking circles. Right? It's all a fugazi. You know what a fugazi is?
No, Fugazi. It's a fake.
Yeah, fugazi. It's a wazi, it's a woozy, it's a...
There is no certain way to know what price will be, but at least we have an edge when we use this past data like so. That's what basically differentiates us from just gamblers. Technical analysis gives us the ability to not only win, but to be able to repeat that win. And most of all, to know why price did not go the other way. If you ask me, given the data from this video, it is indeed a very solid plan actually. Perhaps this is how the markets are actually going to go and not just fall below 10k. One could argue that diminishing returns is because the market cap is just getting bigger. Some would say no, it's reached the top of its adoption curve, and so it's not going to get any bigger from here. Others don't even care about data at all. In my humble opinion, from all this data, I can't just sit with everyone else and say we are going to 100k, we are going to 150k, we are going to 200k after seeing all of this data. Of course, there's always a chance that it happens, but personally, and this is really just for me, if Bitcoin starts to collapse from here and goes as low as those DCA levels mentioned before, I'll just buy. This is what I've said for a very long time, yeah? I've always been saying that if it goes up, I'll probably sell. If it goes down, I'll just buy. So I've given you the levels that I will be looking at in this video. As we go into the bull market, I will not be waiting for 100k. I will start selling before we reach new highs. And I do that at the conservative Fibonacci levels. The ones I've mentioned, the 2.618, the 3 fib and the 4 fib. After that, I will swing trade futures contracts. That way, I make money if BTC defies all past data and continues up instead. And of course, I will have stop losses to take me out if the whole thing was to turn back around and collapse. It will be a bull market after all, so I will have a lot of things to do, like trading on Uniswap. There will be so much money to be made in the bull market, but I know already what to do with my long-term holdings. Again, this will need a lot of confluences. Like if we are in 2025, in say November or December of 2025, and the price is at say 55k or say 60k, whilst everybody will be saying, we are waiting for a super cycle, or we're going to $300,000 by next year's end, because that's what they'll be saying. I will recall that with this past data, which is why you should save this video, with past data, BTC topped in November twice and in December once. So I will not be waiting for, say, a super cycle, because that's the story you will hear on media. Now, I have given you the super bullish figures, so if you want to place your ideas on those, perfectly fine. We have the 1.618 and the 4 fib that goes right up to $200,000, which you can use. But simply given past data, I will not be expecting that we go that high. I actually have a lot of things that convince me that this thing could crash instead. But if we continue to go up, I will follow my conservative levels. If you want to know why I think Bitcoin could go to $3,000, watch my Bitcoin price history video, then watch the Bitcoin to 3K video. You need the Bitcoin price history video for the 3K video to even make sense to you. So you need to watch both of them. If you do not have the time, you can make time some other time and watch the videos, but you must watch the Bitcoin price history video to understand how Bitcoin's price has actually been acting over the past 14 years, to then have an idea of why it could possibly go to $3,000 and what that could mean for Bitcoin as we know it. It will give you the data you need to make your own decisions. I want to know though, what do you think about the data in this video? Do you think Bitcoin will go like so as we have talked about in this video, or do you think we just go straight to 10k instead? I would really like to hear what you think in the comments. Also, if you appreciate the work I am doing here, clicking the like button will go a long way to help the channel grow, and it will also motivate me to make more videos for you. Until next time, stay safe.